Welcome to Ignite Finance, and we have in studio Joel Bagundin. Joel, it's
Thank
good
you.
to have you again.
Thank you. Thank you, Tajeram. It's
All right.
always a pleasure being here.
Yes, thanks. We cut straight to the chase. Now, we're talking about microfinance here in this edition of Ignite Finance. Now, one of the common complaints of businesses, especially small and medium-scale businesses, is access to finance. How has this evolved over the past 5 years, and what initiatives have been taken to bring about the change that we've been seeing?
Thank you. Thank you for that. Very, very critical question with respect to microfinancing or small and medium enterprises accessing financing. First of all, what I want to say in response to that question is the the issue of access to financing is really not availability of capital. The question really is how to access capital, not a constraining factor in the sense that there are constraining factors to such an extent that you can't access capital. The banking sector, the financial sector has excess liquidity, and we've been in this position for a very long time, which signals the strength and financial soundness of our financial sector. Specific to small and medium-sized enterprises, while it is true that we can argue, or rather it is a matter of fact, that our financial sector is underdeveloped, it is not as advanced as other countries in the region or as advanced as the developed world and more advanced economies, whereby there is a lack of innovative financing tools, other financing tools and instruments. And of course, there is always this argument and concern about the risk-averse nature of commercial banking. But that's a different matter, which we can devote more time in a separate episode, perhaps, to talk about the risk-averse nature of commercial banking, and that has to do with the nature of commercial banking. But the key constraints have always been, it's two sides of the story, and often only one side of the story is being told, which is access to capital, and the one that I just articulate. But the other side of the story that is not as in a magnified manner, equally magnified manner, being told, and that is small businesses have their own inherent constraints that would prevent them from accessing capital, such as, for example, they don't want to do proper accounting, they don't want to have their accounts audited, they are not keeping proper records, and when they go to the bank, historically banking in Guyana was done on a relationship basis, meaning historically, when I say historically, I'm talking 15, 20 years ago, you have an established relationship with the financial institution. The financial institution extend credit to you over the years. You've demonstrated your credit worthiness by repaying those facilities on time. You have not defaulted. And so banking was often done, or traditionally done historically, in that context, that historically we extend a loan to you, you pay your service, your loan well, and so we will give you more credit. Today the market is much more complex and much more sophisticated, whereby banking is cannot be done on a relationship basis anymore. It has to be done in terms of analyzing your business proposal. It has to be done on the basis of analyzing your financial and economic feasibility studies. It has to be done on the basis of whether you took all of the risks into account, what measures you've taken in terms of de-risking your project, what measures you've taken to manage your risk profile, mitigate the risk associated with your investment or your project, whether you've done a proper well-studied business plan and feasibility studies and so on, whether you have proper management structures in place, whether you have qualified managers in place who have the capability to manage this enterprise and take it into the future in a, to execute your strategic growth plan. So these are the things which inhibit, in part, small businesses from accessing capital, apart from collateral constraints and collateral requirement and so on. These are some of the things that inhibit them, that is often not talked about, not discussed publicly, or not given placed much emphasis placed on it. But these are serious issues. Lack of proper the capability of them managing the enterprise from a financial management perspective. And from the banking sector, I've worked more than half of my career, or my entire career, almost my entire career, I've worked in the financial sector. I've worked in the banking sector, now I'm in the advisory space. And from my experience in banking, you have a lot of businesses that mismanage their finances. Their credit is extended to them for short-term financing, for example, and they misuse the short-term financing. They do not operate the short-term financing, for example, an overdraft, in the manner in which it ought to be operated as per the regulation. There are certain rules in how you operate an overdraft. For example, you have to make deposits to your account. When you collect cash, your cash sales, you need to deposit those cash into your account, those cash sales into the account. You need to reflect, you need to swing the account into a credit balance at least once per quarter. That don't happen. That don't happen. So what happens? Part of their overdraft becomes hardcore. And then when the bank reviews your overdraft, they now have to hive it off into a loan, because you did not operate it in the manner that you're supposed to operate it. And the reason for that is not because the business is not doing well or not turning over the cash. The reasons are because they don't want to declare the cash in, they don't want to reflect this high turnover, because they don't want the tax authorities to scrutinize them. And other reasons they're using short-term financing to finance long-term assets, or on personal expenses, and those things work against you. They don't want to do proper audited accounts. Those things work against you. So first of all, I want to state, with respect to, I want to highlight and emphasize, with respect to some of the limitations or challenges faced by small businesses from accessing capital, is really not the accessibility to available capital, but the question really is how to access, apart from other legitimate financing constraints such as collateral inadequacy and so on. Having said that, now to what, as a matter of policy, in terms of government policy, what have they done notwithstanding those limitations, those self-inflicted limitations? What does the policy environment look like for this important sector in our economy, the small business sector? In 2004, there was the Small Business Council vis-a-vis the Small Business Bureau Act was enacted under the PPPC administration, the 2004 Act. Pursuant to the enactment of that legislation, the Small Business Bureau was established. The Small Business Bureau, having been established by the PPPC administration way back in the early 2000s, that was an agency that was set up particularly to address the challenges small and medium-sized enterprises face in terms of accessing financing. So what does that agency do? Now, that agency was allocated financial resources from the Treasury in the sum of over $1 billion, which is replenished every year through the national budget. And that fund is operated in a manner similar to what we would call in finance a revolving fund. So a portion of that funding through the Small Business Bureau is used to distribute grants to small businesses, mostly mostly startups, very young businesses, up to 500,000 the last time I checked. And another portion of it is used to cash secure, to provide vis-a-vis cash security, a form of collateral in the form of cash security, to collateralize the loan, a small business to access a loan through one of the financial institutions. And the way that works is that is particularly for businesses that have collateral constraints. They want to access a certain value of loan, but their collateral value that they can pledge to secure this loan does not adequately cover the value of the loan. So through this mechanism, which is a government mechanism, a government policy mechanism and tool, the Small Business Bureau funding is used to collateralize or to secure up to 70% of the value of that loan. So if you want to borrow, say $1 million, I'm just using a figure for the purpose of the discussion, and your collateral represents 30% of the value of $1 million, then the bank will accept your 30% collateral together with the 70% guarantee, which is a cash secure guarantee from the Small Business Bureau to advance that loan to you. So that is a mechanism and a policy tool through which the government, which has been in place for a number of years, for a good number of years, for small businesses to access funding. And that mechanism does not only address the collateral constraint issue, it also addresses cost of financing by providing a cheaper cost. So the interest rate that you pay, the interest rate that applies to that type of loan through that mechanism is lower than the average market rate that the bank would, than if you were to ordinarily go to the bank to access a business loan. So that is one example of a policy tool in terms of the broader policy environment. Of course, that is complemented by other initiatives that are private sector driven. You have within our organized private sector the business support organizations, the private sector commission, which is the umbrella body. Then you have the business support organizations that falls under that, the GCCI, the GMSA. Then those are non-profit, not-for-profit business support organizations. And then you have the for-profit entities that provide business support services targeting entrepreneurship, targeting capacity building and training and support services to help small and medium-sized businesses to develop their capacity and to be able to access funding. There are a number of initiatives that are private sector led. So on one hand, on the government side, there's some things there, and of course, I don't want to speak on all of it now. I want to allow you the opportunity to ask questions. I'm sure you have in mind to ask, to discuss other intended policy tools that the government has in place.
Yeah, thanks, Joel. Now, what we've seen, there are lots of businesses that start up, and after a while, they fail. Now, there's a perception, that lack of training and mentorship and, other support that they would need, these things are not there. What is being done to address those issues?
Right. So now, as I've mentioned, as I've just mentioned, those are it's not really a perception; it's a matter of fact. Because of I wouldn't say entirely the absence of mentorship is available. Mentorship, but these are private sector driven. Mentorship opportunities for mentorship is available. The government provides, at least now in this term, We've seen the government is making training available, state sponsored, tertiary education available, state sponsored now. We have free education now. The University of Ghana over the past couple of years introduced uh, the School of Entrepreneurship. So on the government side, you have, on the education side, I would say, that is being designed and developed to create an entrepreneurship mindset for those who want to go in that direction, which is now free. Mentorship, I know that this, through the ministry of, there is a program, there are other programs, and I know I was invited through, or I participated rather. The Ministry of Culture, Youth and Sport was, and I think that program, that initiative is still in place, was administering a, a small grant targeting entrepreneurship, targeting youths in particular, whereby inviting youths to present proposals, innovative proposals, and it goes through an evaluation committee, and then they are awarded this grant to start up. Part of that program, there's a mentorship that was attached to it. And I am not aware that that program was discontinued, because I participated, I was invited through the American Chambers of Commerce. The Ministry of Culture, it's a collaboration with the Chamber of Commerce to provide resources, to identify persons to serve as mentors for a group and to evaluate and so on. So at the government, so while there's private sector, there is some initiatives through the business support organizations that they're doing. There are some that you have to pay. Some of the services you have to pay for to access mentorship, but it's an investment. It's an investment, but then again, the question of affordability comes in. On the government side, which is those initiatives are free of cost to the public. I know of one such, which is the one through the Ministry of Culture, Youth and Sport.
All right. I was going to ask, right, if, for example, if the Small Business Bureau is giving me $500,000 to start up a business and I have no experience, how would I succeed? Do you think that that money should, part of it, mentorship and training, should be part of that package rather than just a handout? As long as they see your project and they said, yes, I like this.
I'm not sure about mentorship through the Small Business Bureau. But I do know that the Small Business Bureau provide that support mechanism as well in terms of training. Because in order for you to access the grant, you have to present a business plan. And that implies you have to put some thought into your business plan. That implies that your business plan has to present a viable business case that makes sense. And as far as I'm aware, the Bureau does provide in the approval process, they would evaluate all of that, take all of that into account. And there is some amount of training and capacity building that is done. There, I did not mention too that there is one specialized microfinancing institution in Ghana that has been there for decades. The Institute of Private Enterprise Development, IPED, which was established specifically targeting microfinancing in Ghana, private sector led, since around 1986, sometime around then, very long time back, decades ago. And that institute, I look at their annual report recently, and they're set up to do this. They're set up to provide the funding, they provide the mentorship, they provide training and coaching and the monitoring and so on. That's how microfinance institutions work. So the question that there is an absence of this type of support in the market is not entirely accurate. There are some institutions available in the market that provides the kind of microfinancing that is needed. Whether that is sufficient to meet all the needs in the market, that's a subject of a subject for debate. There is always a greater need for this type of incubators, venture capital, which we don't have in the market. Venture For example, so microfinancing is one. IPED is one such institution. We can say that we don't have incubators, venture capital institutions. That is very different. Venture capital is, which we don't have in the market, is specifically for startups, specifically for startup businesses. And the way venture capital works is that it goes through the business planning, from the idea conceptualization to developing that idea into a bankable business plan, to funding that, to buying into that idea and financing it. And the venture capital firm would take ownership of it in the form of equity stakes, own it for a number of years, the first couple of years, to ensure that it is successful. And when it becomes successful and start making a profit, by which time they would provide that knowledge, transfer that knowledge and training to the owner. They then transfer it to them and make it into a sustainable. We don't have that in the market, but it is not accurate to say that we don't have some sort of microfinancing and some sort of institutions in place. The government, on the part of the government, they've been targeting not venture capital, but they've been providing the support framework and the ecosystem to allow what you call incubators, which is similar to a venture. Incubators mean you're starting up a business, and we provide you with that support to take it from an idea, from a concept to an idea, develop that idea into a viable business, and then implement. There are some incubators which, as a matter of government initiatives, that were implemented onto this administration, targeting specific regions and specific sectors. Like, for example, in the agriculture, as part of the food security strategy, there are some such type of initiatives.
Mm-hmm.
Whether we need more of it, yes, certainly we do.
Right, thanks. All right, recently the Vice President announced the establishment of a development bank, but that will be in the next term. What does that mean to small and medium-sized operators?
Well, with all of the foregoing in mind, that we've just discussed, juxtapositioning that commitment to establish a development bank that would provide interest-free financing, and what does it mean for small businesses? It is important to juxtaposition that with what I have seen, with some key indicators that I've seen, bearing in mind all that I've said just now. What is the state of the business, small and medium-sized business sector in Guyana? What is the state? And when I say what is the state, how that sector, which is an important part of it, which plays an important role in our economic development, how has that sector fared or thrived in the last 5 years? Taking into account all that I've said just now in terms of challenges, in terms of constraints, in terms of how to access capital and so on. Between 2020 to 2025, according to the Deeds and Commercial Registry database, more than 60,000 small businesses have been registered. More than 60,000. That is an unprecedented number. That is an exponential number. We've never had that much businesses historically registered in Ghana. That is indicative of the fact that the economy, the economic environment, the policy environment, the investment climate, all of that together is generating opportunities to support the establishment and the existence of these businesses. The economy is generating the opportunities. credit to the policy environment, the economic policy environment, the governance environment, the macroeconomic environment. There is another policy that I did not mention. In addition to the Small Business Bureau, the Procurement Act of Guyana stipulates that a minimum of 20% of public sector contracts must be awarded to small businesses, targeting small. That is a second critical policy tool by the government. Again, this is a policy that was implemented under the PPPC administration. Important that I make that emphasis. How has that policy worked? In the last 5 years, more than 6,300 contracts, government contracts, were publicly tendered. More than 6,300 contracts were publicly tendered. More than 80% of those contracts were channeled to, were awarded to small businesses. More than 80%. So that means the minimum 20% threshold by law, the policy environment, the economic environment and the policy environment have allowed for small businesses to benefit from public sector contracts exceeding the minimum threshold. That's a positive indicator. 6,000 small businesses registered, more than 80% of public sector contracts, more than 80% of the 6,300 contracts have gone to small and medium-sized businesses. Thirdly, a third policy tool, public sector policy, public policy, the local content legislation. The enactment of the local content legislation paved the way for locally bred indigenous companies, Guyanese companies, organic companies, most of them are small businesses, very relatively new, have benefited from local content spend, and that amount is another according to the local content secretariat database, about 2,000 companies benefiting from local content as a result of the local content legislation. Over 2,000 companies, local companies, benefiting from that annual spend of $800 billion US. So 3 important and critical public policy tools and initiatives that have allowed for the growth and development and stimulation of the small business sector, that paving the way, paving the environment, allowing them to benefit. Fourthly, a fourth indicator to look at, from examining the income tax data for self-employed persons between 2015 to 2025, pre-oil to post-oil, based on the income taxes collected for self-employed persons. In 2015, their gross earnings, we can extrapolate their gross earnings. Their gross earnings were annually around $13 billion. Today, in 2024, their gross earnings is now in excess of $24 billion, another positive indicator. Fifthly, a fifth indicator, you look at credit to the private sector credit to business enterprises has more than doubled in the last 5 years. So these are altogether positive indicators that, notwithstanding the challenges and constraints, their policy tools, their legislation, and institutions available, both public and private, emphasis here on the public framework, public sector framework, or public policy framework, that have enabled, that have supported the growth and development and expansion of small business, the small business sector in Guyana. And that has been quite remarkable. The achievements in the last 5 years from those indicators have been quite remarkable.
All right.
I did not answer the question. The bank,
Yeah,
the
bank,
development
yeah.
bank. So with that in mind now, what does the development bank mean? Development bank simply, with that, when that is established, to now provide interest-free funding, that would have a tremendous positive impact on the small business sector, because right now, with that complementing the available institutions and available initiatives and available policies in place, and that have and I've gone through what that have resulted in terms of accomplishments, in terms of how the small business sector, a development banking institution now, which is very different, its role is very different. A development banking institution, development financing is very different from commercial banking, commercial lending, very different from microfinancing. Development banking or development financing is financing that targets the creation of new industries. The existing financial institutions, commercial banking and microfinance, those are to sustain existing industries, to finance the growth and expansion and the sustainability of existing industries. Development financing is to finance the growth, the creation and the growth of new industries. So we're now talking about all this 60,000 new small businesses. This now they will have an opportunity to access zero interest-free capital to sustain their growth in the creation of new industries. So that will have that is expected to have a tremendous positive impact as far as access to capital is concerned, and as far as cost of capital is concerned, in terms of, for the first time you'll have interest-free capital for the business sector in Guyana.
Yeah, fantastic. Now, based on your experience as a banker and a financial analyst, what are some of the common pitfalls of small and medium-sized enterprises, micro enterprises included? And what are some of the recommendations would you offer to address some of those pitfalls?
Well, the pitfalls, I've mentioned them earlier when I answered your first question. The pitfalls is, the main pitfalls, their configuration in terms of how they manage the enterprise, proper record keeping, proper accounting, proper financial management, the lack thereof, the lack of these in place. These are their main pitfalls. Notwithstanding the collateral inadequacies that you may have, the collateral constraints that you may have, focus on proper accounting, proper record keeping, focus on growing your business organically. Don't try to go from 0 to 180 in the shortest possible time, which is impractical. Focus on growing your business organically, slowly, organically. Build your capacity slowly, organically, incrementally. Invest in yourself as the owner. For those who are entrepreneurs, invest in yourself, invest in your team. Take advantage of all the support services available, because there are a lot of support services and training that are available at a very cheap cost, and some are free of cost. Those that the government system provides, such as for example, the Bureau of Standard provide training and certification and so on. Those are, you don't have to pay for that type of support. Then you have the business support organization. Do not misuse your financing. When you obtain financing from an institution, a lending institution, do not misuse it. Put it into what put finance. If it is for working capital to replenish your inventories, then do exactly that. Don't take it and do something else with it. Don't take it, instead of replenishing your stock, you take it and you buy a car. And these are some of the pitfalls. These are some of the pitfalls that cause them from not growing and not being able to access additional capital to grow their enterprise. So those are the pitfalls. Simply just do the right thing. Do the right thing. Invest in yourself. There's a lot of resources free of cost that you can on an informal basis. You don't have to invest a lot of money. There's a lot of literature. There's a lot of things that once you have access to the internet, learn as much as you can to improve yourself and to manage your entity well. And as long as you do that and you grow organically, you will accumulate wealth. You will accumulate. Keep investing in it. You will accumulate, and you will be able to access additional funding as you scale your business and as you grow.
Mm-hmm. How do you see the environment for small and medium-sized businesses in the next 5 years?
With building on, we know for sure that the government will continue to build on the existing institutions, the existing initiatives that are already in place that I mentioned in the discussion, such as the Small Business Bureau, the 20% procurement, and so on. And local content will continue to grow. Educational facilities, training initiatives, those will continue to grow to meet the needs of the market, the needs of the economy. So what is already available, those we can expect in the medium term, government will continue to build on those and to improve on them. With what is to come, for example, the development bank, with that addition to the market as an additional source of financing, a new source of financing rather, a new financing solution which is free of cost, and that will come institutionally, that will come with its own support system to ensure that the development bank will not just come and give you money interest free and leave you. That will be set up in such a way to ensure that it identifies good projects, good viable projects, make them viable, and to provide the framework and the tools, the support necessary, the tools necessary to ensure that the ventures that it finances, the investment that it finances, are successful. So with that in mind, with what we know, will come the new things and the existing things. The medium term for the small business sector is, for me, from my standpoint, is very positive. It's very positive, and it will not translate automatically or by accident. The small business sector players, the actors in the market, the participants, they have to help themselves. They have to, more importantly, government could provide all the support necessary, but it is the private sector, the small business sector, that have to organize themselves and have to take advantage of those opportunities and capitalize on those opportunities, more importantly.
Right. Thanks very much, Joel. It's always good to have you on Ignite Finance. We've come to the end of the program, and I'll see you again next week, where we'll continue the discussion.
Thank you, Tajeram.
Yeah, thank you. Mm-hmm. Yeah. Mm-hmm.